African Oxygen, commonly referred to as Afrox, reported a 8% rise in full-year headline earnings per share to 95.3 cents, despite difficult trading conditions in South Africa. Company Chief Executive Brett Kimber joins us now in studio to unpack the numbers. Brett, many people would say that with the energy constraints and the power constraints we're experiencing in South Africa, that this would be a perfect time for Afrox to get in on the game and take advantage of the opportunity. How difficult has it been to navigate the South African environment?
Well, last year there was strikes in the motor industry, and as far as producing energy in the LPG portfolio, we are taking advantage. There's a lot of growth there, and we had to import a lot of product. But specifically, the energy side is constraining a lot of other customers, so that hurts some part of our business as well.
Brett, Lindsay in Cape Town, can I look at one of the first paragraphs in your accompanying commentary to your results which came out today? Prolonged uncertainty in the South African economy, it says, coupled to low GDP growth, continue to impact upon demand for products in key sectors. Market activity remained depressed, etc., etc. We hear this from all companies that operate in the South Africa at the moment. On the other hand, what I like, which is a phrase I've used several times this evening, what I like is the fact that you're adapting to it, and what I also like is the fact that you've signed this new deal with Columbus Stainless. So does that tell us that the South African economy is starting to rejuvenate itself a bit?
I think, Lindsay, you've got the exchange rate, which is helping the steel industry. Finally, imports are less competitive against them now. There are niches. The food side of the business, which is the carbon dioxide, is growing, and we're seeing a lot of opportunities around our hard goods business. So yes, we've adapted the focus, the leadership, and are seeing some growth areas.
Chris, I'm not sure if you believe in the opportunities, eh?
No, I think there must be a lot of opportunities. But I'm thinking also outside of South Africa's border. I mean, what do you see as far as that is concerned? There must be some huge growth into the future.
Yeah, Chris, we've got a strong platform there already in 13 countries. So East Africa, Tanzania and Mozambique, now the oil opportunities or the gas that's been found there is really going to drive a lot of growth. The demographics and the wealth on the back of that, we're seeing huge opportunities. The infrastructure spend will come with it. It's not just the extraction of commodities.
Right.
Mark, would this be a stock maybe on your radar?
Very, very definitely. This is a quality result. To actually achieve this result in this economy is nothing short of terrific. In fact, flat EBITDA, roughly in the first half, a very good second half, up 10% at the EBITDA level for the full year is pretty good. Hard goods putting in a very good performance. Brett, you've been on a business improvement journey. To what extent do you attribute that business improvement journey under your stewardship to the result that we saw today?
I think it's going to come through more and more, Mark. So 2012, as you know, we had to go back to the basics. In 2013, we put leadership in place, and I brought in leaders from externally from the Linde Group to actually drive that. And that accountability, also during the year under that new leadership, we put together a structure which has eliminated a fair amount of inefficiency and overlap. And so even though the majority of that benefit we only saw in the last quarter, you're seeing it coming through, we're seeing it sustainable going forward as well.
Encouraging.
Brett, the last time I spoke to you, we touched on shale gas, and you mentioned that it is on your radar. Any progress? Has any progress been made with regard to that interest?
Well, we are in Mozambique, definitely looking at expanding there. Within South Africa, we just, through the Linde Group and the Clean Energy Group, are working closely with the majors in the world to see where those opportunities. We also know how the Linde Group in America is supporting those companies. So we will just bring in and borrow those technologies and that learning when necessary into South Africa.
Brett, despite the fact that there's a challenging environment in South Africa, but an exciting one in the rest of Africa, you're still going on with what you call a capital program. Can you give us some more details about where you're spending your money? Yeah,
so Lindsay, what we wanted to do is just rejuvenate our asset base. So it was tankers and cylinders first. Our Pretoria air separation plant we did, and now going forward it's going to be a new facility down in Port Elizabeth, 150 tonne a day air separation plant, and then expansion in Durban, moving to a new site in Gunubia. So that really is just refurbishing and updating and also positioning ourselves for the opportunity in places like Kucha.
Brett, before we let you go, yesterday in the budget speech, the Finance Minister made mention of focusing on a low-carbon environment. Does this have any implications on your business?
Well, we generally are low carbon, and we're reducing it by putting in more efficient plants, but we will be able to help companies. Sasol, for example, wanted to reduce theirs. We take CO2 as an off-stream from theirs, clean it up. So yes, we can help companies, power companies as well. We can help get lower emissions by adding oxygen, for example.